Hey traders, just want to bring your attention to the US dollar versus the Norwegian krone on the weekly time frame. As you can see here, we're inching towards this key level of resistance here at 8.7298, and this level has not been broken ever since 2016, almost about 2 years ago actually. So given that this is representing a big barrier in the way of price, and that price has for the past 8 to 10 weeks been advancing towards it, it makes sense to potentially prepare for a movement or another bounce off it, given that we've seen 1, 2, 3 bounces prior to now. Could we see the fourth bounce followed by a move to the downside? Well, nothing is ever guaranteed. However, we do have good evidence to suggest that this could happen if we do get the movement up to this point here. So not only is this level a key level which has been well tested prior to this point, we also have a Fibonacci extension into this level as well, ABCD completion point. When we look at point B to point A, we can see that the 1.272 extension is right there, overlapping near perfectly with the level, which is just what we want to see, actually, a confluence of factors in our support here. Another reason why this could potentially be a good medium to long-term sell is that we are rapidly approaching, given that we are in the early phases of December, we are rapidly approaching the seasonal bull run with gold and silver and of course equities. And whenever they go up, the US dollar as a terms currency typically goes down against whatever currency it's paired with. Okay, so the US dollar versus Norwegian krone very much on our watch list because we've got this key level of resistance in the way. The 1.272 extension representing the ABCD turning point and seasonality coming into the picture. Okay, so in order to trade this one, what we're going to do is we're going to simply place a sell order on or just below the level with our stop loss round about here to give it enough room to breathe, essentially. Please bear in mind that the wider your stop loss, the safer it's going to be. But on the flip side of the coin, the wider your stop loss, it means that you do inhibit your reward to risk potential. So if we did decide to trade this one, if we did get the setup, and certainly it would be a trade worth taking given the reward to risk and the logic behind it, but if we did just do a bit of a calculation here and essentially move our reward to risk based on our stop loss, so if our entry point was on or just below the level, like I mentioned, stop loss round about here, we can see that we've got already, even if we're targeting the midpoint of this range, a 3.62 to 1 reward to risk trade. If we're taking it more or less to the bottom, it's a 6.17 to 1 reward to risk trade. Alright, so that's only risking 1%. If we're risking 2%, that's 12% potential gain. And of course, we'll be using our scaling out techniques along the way if we are triggered into the trade. But of course, if we are and we do get the setup, well, the setup's advancing. But if we're in the trade, you'll certainly hear from us again regarding management options. And one thing we typically do is when we are triggered into the trade and we are at a 1-to-1 reward to risk, then we typically scale out the position. Okay, so that is the US dollar versus Norwegian krone. Have a great week ahead, folks.